Monday's open in the pound could have been far more dramatic than it was, and this will be a relief for many a trader, with any uncertainty now likely to be resolved during market hours. We were heading into the weekend with it looking like the pound would either rocket or collapse on the Monday open as it reacted to the Parliament vote on Boris Johnson's Brexit deal, but it wasn't meant to be, with UK Parliament passing the Letwin Amendment allowing for more time to digest the deal before making any decisions on it. This put PM Johnson in the position to be needing to request an extension from the EU, and it is now expected the Prime Minister will look to get Parliament to sign off on the deal as early as today. Indeed, more volatility is expected, but a more welcome volatility during market hours. Again, we continue to highlight our view that the greater risk for the pound is to the top side, not to the downside, with more upside on the cards as downside risk associated with a disorderly Brexit outcome is further priced out. How things play out with respect to deal or no deal is another story, but at current levels, even without a deal, indications that disorderly Brexit will be averted will be enough to inspire more upside. This leaves plenty of demand from medium and longer term players into dips. There isn't a whole lot to report on otherwise, though if there is one other story in the FX market right now, it's this wave of broad-based profit-taking on long US dollar exposure that is getting attention. We think soft dollar protectionist trade policy from the US administration will continue to play a role, while at the same time the Fed is forced to take an even more accommodative stance. As far as risk markets go, things have been more sideways of late, though we continue to warn of downside risk ahead, with equities exposed to capitulation now that central bank policy accommodation and government stimulus tools have been exhausted over 10 years after the financial markets crisis of 2008. Looking ahead, Monday's calendar is exceptionally thin. We get German producer prices, scattered central bank speak, updates on the Brexit front, and a national election in Canada. That's all for now.